switch this around. Try that again. Hey guys, how are you? All right, let's get started. Hello, it is me, Danielle, your upcoming real estate, and thank you for joining me for this week's and today's Tuesday tip at 2. All right. Today I'm going to be talking about how to shop for a mortgage. Recently, I had some things come up while being a realtor that had a lot to do with the mortgage institution, and also I was having a virtual consultation, which by the way, just put in a change and say that if you like to sign up for a free virtual consultation, do it at bit.ly/DJ consult. And while I was having one just today, I was just talking with a potential client. There'll be a client there kind of looking, their timeline is looking at early 2021. But in telling them about the whole hiring process, they really thank me for giving them information on, I've heard people say shop for mortgages, but what the heck does that mean exactly? And wasn't clear. And I know I tell my clients that a lot of the time. And so I just wanted to really kind of expound upon the idea of shopping for a mortgage, Okay, so we're going to go over this, and we shouldn't take too long. And honestly, I kind of want to do a bit of a series. Hopefully, I'm thinking for next week's Tuesday tip at 2. And of course, you can comment on this, and you can also DM me if you think that I should do a series on mortgage. I want to bring in a mortgage expert and ask them, kind of delve a little bit deeper into mortgages and what to do and everything like that. So this is just kind of will be part 1 of understanding mortgages, right? So shopping for a mortgage, what exactly does that mean? So I want to lay some groundwork a little bit. But shopping for a mortgage, you can do it within a 30-day span. Okay, you can do it within a 30-day span, and where the credit bureau will only see you. So, for example, I'll try to do it as an example. If you have tried to inquire about getting a mortgage, 5 different institutions, okay, the credit bureau will only see it as one hard inquiry as opposed to 5 different. So, like if you're going for a car loan, you're going to see 5 different, car loans or bank, for that car loan come up as hard inquiries, as opposed to a mortgage, you'll see it as one hit. So if it takes, 10 points, if you will, from your credit score for that hard inquiry for a mortgage, it won't be 10 separate ones for each mortgage company. It'll all count as one, as long as you do it with that 30-day period. So I want to lay that groundwork. A lot of times people are concerned, like if I shop for mortgage, I don't want my credit score to go down, or for it to negatively affect my credit. And it will not. As long as you do it within that 30-day time frame, you are good to go. So that's why it's very important when you know you are ready to look for a home, when you know it's good to do your research, it's good to consult with a realtor to let you know, hey, you're probably in good shape to buy a home at the save that certain amount, credit score is where it should be, and then it's time to shop for mortgages so you can do it within that time frame. Okay, so let's dive right on into it. What type of things are you asking about and looking for when shopping for mortgages? Really, it has to do with your financial situation. Just for as some examples, different institutions will have if I could call it a deal, they'll have, running deals or incentives, if you will, in regards to, kind of drawing people to get a mortgage with them. So, for example, they might say, hey, you can get up to $5,000 towards your down payment and or closing costs. If you don't have a whole bunch of money saved, you have money saved, but not a whole bunch, that is definitely a draw for you as, a person getting that mortgage, right? It may say, hey, 100% financing, right? It may say, hey, low interest rate. It may say, hey, If you have low credit scores, we're willing to work with you, and you don't have to put a high down payments, right? They might say, hey, we're doing $10,000 worth of closing costs and or down payment, and you don't even have to be a first time home buyer, right? It's for anybody. So there are different incentives that different institutions will have that allow you to get a mortgage with them. So you have to determine what's good for your scenario, what's good for your situation. If you have a lower credit score and you find a mortgage company that's willing to work with you with that credit score and you can secure your house, go for it. If you want to go with the one that gives you a lower interest rate, go for that as well. If you have $40K in the bank and you're not concerned too much about closing costs and stuff like that, then you may not need to go with the bank that has the incentive for 100% finance or money for right? So it just depends on your scenario. Now, what are some things you're looking for? You can ask questions about rates. What is your rate, right? So what is your rate? Right now, we're looking at very low rates, okay? So historic low rates. So you're looking at under 3%, a lot of times 2.9, 2.8, which is fantastic. Different lenders have different guidelines. So even though overall that is the record low, not every lender is going to go that low. And it is also based on the credit score. And each lender has different guidelines for the credit score that will qualify for the lower interest rate, right? So you can ask your lender and the broker for a list of current mortgage rates and whether the rates that are quoted are the lowest for the day or week. Now, what you have to understand about the interest rates for housing is that it can change. It varies, okay? That's why a lot of times we're going to go over this. We ask about a rate lock, okay? Rate lock. And we're going to go over that in a moment. So you have points, okay? You have points, which points are pretty much the fees that the mortgage broker or bank will get paid when they give you a mortgage, okay? You have the fees, which they can pretty much, a lender can either have points and fees, or they can have just fees or just points, okay? So you ask what each fee includes. Now, there are your traditional settlement fees and costs, okay? But you also have what's called origination fee, which has to do with the lender and the fee that they charge and pretty much the money they're going to receive getting you a mortgage, okay? But the general fee that comes with closing on a house, you can still ask them about that. It should be pretty much, those fees should, so for example, as certain fees, an appraisal, all right? That's usually the $600 ballpark, right? Now, if you see a lender has $800, it's like, you might be like, $1,000 maybe even. You might want to be like, hey, that's a little high. Usually appraisals are around $500, $600, maybe $700, but generally I see them as $600. So ask a question about those different fees to, pretty much end the transaction for the closing costs. But they should be kind of in the general, right? You have down payment. What's your down payment going to be? Okay, is it going to be 3%? What opportunities do they have for you? Different lenders have different down payments, right? Different institutions that offer you different down payment. Now, with the FHA loan, it's government funded, so it's going to stay the same rate, right? It's going to be that 3.5%. But you could be getting a conventional loan, and one lender will say, hey, you can qualify for 3% down here. Another lender might say, hey, you qualify for 5% down here, right? So things like that, of course, is different. Some may require you to have a private mortgage insurance. And I want to go over that definition for a second. Private mortgage insurance, which is PMI, is pretty much, it protects the lender against the lender, which is the banking institution or mortgage company, lender against a loss if a borrower defaults on a loan. It is a payment usually prior to the borrower for loans in which a down payment is less than 20% of the sale price. Less than 20% of the sale price, or if you're refinancing, take that into account as well. Now, in most cases, when you acquire 20% in equity in your PMI is canceled. So once you gain that 20% in equity, over time, the PMI is canceled. Okay, so PMI is something to consider. Okay, PMI can add $200 a month to your mortgage. Okay, and some other things to consider as we come to down payment, private mortgage insurance. That's pretty much most of it. You can also ask about what kinds of loans that they have, and what kinds of loans do they offer. Do they offer FHA, conventional, different rehab loans, and things of that nature. Now, I want to stop right there because, again, I want to kind of get into a series in regards to mortgages, what to look for, what to expect, what's the best option for you. But again, to quickly go back over, I want to ask about interest rates. I want to ask about the specific points, which is specific to the lender, that they have. Now, points are fees paid to the lender or broker for the loan and are often linked to the interest rate. Usually, the more points you pay, the lower the rate. Okay? Now, you want to make sure you know that dollar amount, not just the point. Because they'll say, 1 point. And you're like, oh, that's awesome, just 1 point. You want to know what that dollar amount means. Okay, so you ask that question. Also, again, what ask about the fees. And you want to ask about down payments, what percentages their down payments are. And that typically comes into play. You're talking about a conventional loan, jumbo loan, other types of loans, because FHA stays the same. Okay, and you want to ask about that private mortgage insurance, which they coincide, they go together. Because a lot of times, if you're putting down less than 20%, we're going to have to pay a PMI. All right, thank you guys so much for joining me. I hope I wasn't too long. I hope it was very clear. Listen, comment, DM me if you want to receive my my weekly, newsletters. You can do so at bit.ly/DJM consult. bit.ly/DJM consult. I look forward to hearing from you guys. Thank you so much. And I will talk to you next week. And hopefully by that time we will have somebody, a guest with us, to go more into mortgages and what they are, how they can benefit you, and so that you are educated. Go to shop for your mortgage. You know exactly what you're doing and exactly what you're talking about. Thank you so much for joining me. Again, it is Danielle J. Mitchell. You have from real estate. And remember, there's no place like home. There's no place like buying. And I will talk to you guys soon. Stay cool out there. Bye-bye.